Hey, it's Rick here with your market recap for Tuesday, September 13th. Quite a day in the market. When I woke up early this morning at about 20 after 5-ish, and I looked at my phone, looked at FinViz on my phone, and I saw that the markets were up about 1 to 1.5%. So this is boding well. But I knew that the CPI report was coming out at 5:30 our time. Anyway, about 20 minutes later, I looked at my phone again, and sure enough, everything was down 1 to 1.5%. I heard later, sometime during the day, that the Dow Jones went from 200 points up to 400 points down, a 600-point move in 2 minutes. So obviously, the news was not taken very well. Our risk model has turned decidedly red, so that if you've been heeding my advice all along and staying in cash, then who cares? And that's the place to be, and it looks like it's going to be the place to be for a while yet. So that's the model on the sectors. Last couple of days, we mentioned there's been a sea of green. Today, it's a sea of red. We had the Qs were down 5.5%. SPYs were down 4.3, small caps down 3.9, and the mid caps down 3.2. And Toronto fared better than most, at only down 1.75%. And all sectors basically were red on the day. So looking at the charts, starting with the spiders, you can see this nasty red bar. The selling started right from the get-go and never abated. Tiny blip at the end, which was obviously just some short covering. And they all look the same. If we look at the Qs, all these charts look the same. So we're now decidedly below all the moving averages that I follow, the 8, the 21, and the 50. And of course, forever we've been behind the 200. So not good. My best bullish hope for tomorrow would be, what I would love to see is a gap down below this low here from September the 6th. Gap down, maybe go down a little bit lower, and then the institutions come piling back in, and we have a rip your face off rally going up this way. That would be the best case scenario. Then that would hold this low, which would be above this one, which would be above this one, which would be above this one. And you could argue that as soon as we get back above here again, we'd be in an uptrend, and it could be all systems go. So that's the best case scenario. The other case could be that we just do this. We just keep on going, and we eventually come to these lows down here. And then God knows what happens from there. I mean, going over to a weekly chart, we got a long ways to go to get down here, but that's not inconceivable. So those are the sort of two possible outcomes for the remainder of this week. Obviously, I'm hopeful of the one that blips back up. Although the markets were down 4 or 5% today, of course, my long-term, or I call it long-term, but it's really a sector index portfolio that I manage for my wife's RSP and my granddaughter's account. I've been 100% cash for some time now, so no damage there whatsoever. And my stock portfolio, even though I was 90% invested going into the day, only suffered a 1.2% decline. So, and I still have sitting on some decent gains, which I'll get to in a minute. So I did get stopped out though of a number of positions, which we'll look at here. ASAI, this one, I'm going to a 15-minute chart now. It gapped down. My stop was originally here at 1797, just under yesterday's low. Gapped down below that. So I have what's called my disaster rule, which says I wait for the mark off the 30-minute low, which would be right here. And if it trades below that, then I'm out. That becomes my new stop. So it held that for most of the day, and then near the end of the day, crunch. So I got stopped out down here for a larger than planned loss. I think my loss in this was 4.4%, so more than I like to take. NFE stopped out as soon as it went below yesterday's low. I was stopped out for a small loss. I think my loss in this was 3%. This pattern still looks decent. I'm just wait now until it sets up again, and we may get another entry. But for now, I'm out of it. NUVL, which I was in at 18, it ran up to 19, put my stop back at break even, and it got taken out of break even. So no gain, no loss. And United Health just got in yesterday on this nice bar, and then holy crap. So I got taken out. I had actually a stop here and a stop down here, but actually I raised the whole positions, the stop in the whole position on yesterday's low to minimize my loss. And sure enough, got stopped out for a 2% loss. So nothing, no big deal. The remainder, so I still have 5 positions. ARPL held up remarkably well in a big down day. So I only have a small position here, 7%. So I'm holding that with a stop, which is down here below this low, low from last September the 8th. Enphase has been a star. Sorry for all these arrows, but these just denote where I bought it and where I sold it. This looks better on a 15-minute chart. If you recall, I was in this back here at 284, around here somewhere. Scaled out some up here, scaled some more out up here, got stopped out on this big move down at 298, somewhere in there. Rebought it here. Yesterday, I added some more here at 302. And then this morning, it gapped down. There's my 30-minute low. And I saw it was gaining some strength, so I bought some more. I actually made this a full position, buying some more at 298 and change. And it's performing nicely so far. So now my stop for the whole position comes down here around 292. EVH, I also added to this one today too. I guess I'll stay with the 15-minute chart. I'm in this one from way down here at 36.73. Haven't sold any. Kept it, and then here today it moved down, and then reclaimed the 5-day moving average. I bought some more back here at 38.61. So now I have I've upped it to a half position. And GLP, let's go back to the daily. It's not doing anything wrong, not doing anything right. I have a stop on half my position at my entry cost of 28.82. Came within 3 cents of it today. So odds are good it'll stop out half of me tomorrow. And then the other half is below this low right here at 27.82. So if that gets taken out, I'll have a small loss. And then HAE, this one is a little annoying. This one is performing very well. I forgot, I had a stop in at 76.23 and another stop down here at my entry point, which is 73 and change. And I forgot to cancel this on the opening bell. And guess who got the low tick of the day? Yours truly, on half my remaining position. So be it. And it's performing it's holding up very strong. So that's it for those. Somebody emailed me. I'm going to digress a little bit here. Somebody emailed me and asked me about a couple of stocks to take a look at. One being Bank of Nova Scotia, and the other being Suncor. Now, fortunately, I'm going to move up MarketSmith up here. Fortunately, both of these trade on the US exchanges, so I have MarketSmith data. Not all Canadian stocks trade in the US, but these ones do, so I have a bit of data. So this is how I would go about looking at it. I have no idea where this person bought the stock, whether it was down here somewhere, in the $50 range and owned it for a long time, or they bought it up here and they're saying, oh shit, or looking to buy it. I don't know. But just how I would look at this particular chart, things that stick out at me. First thing I look at is the relative strength rating. and it's only at 27. So there are 73% of all stocks in the 9,000 stock universe of Investors Business Daily that are outperforming this one. So that wouldn't be good. I also note that it's 27% off the 52-week high. So from here to here, we're 27% down. Now, if I had owned this stock before, down here, up here, I don't know, wherever, my rules would have got me out 8%. So I would have been out somewhere up here. So, but if this is still being held, if that's the question, is this still a hold? I look at institutional interest. It's increasing. There was, that doesn't work on here. Okay, over here. There's now 1,800 institutions own it, up from 1,700 a year ago. So it's got good institutional carry. Over here on the earnings, earnings this year are estimated to go down by 18% and flat for next year. So, you know, from a fundamentals perspective, it's nothing screaming me says this is a growth, what I would call a growth stock. It does pay a pretty cool dividend. 5.8% is the yield. But on a stock that's down 26%, you're getting a puny 5% return. You're still going backwards, in my opinion. So would I buy it? No. If I owned it, would I sell it? Yes, only if it closes below 53.05. If it goes below last week's low, I'd be out of this and wait for another chance to get back in. An interesting tool that MarketSmith has. Let's just compare this one. So this is the Bank of Nova Scotia. Let's just compare this to Bank of Montreal. So Bank of Montreal has outperformed. This chart goes back 1 year. I can change this date. I can go back 2 years, 3 years, 6 months, whatever. I can change these dates, but I'm just going to leave the default here, which is 1 year. So the 1 year performance, the BMO is outperforming Bank of Nova Scotia. If I add in, what's another bank? Royal Bank. It's basically the same as the Bank of Montreal. What's another? TD Bank. Oh, TD has outperformed both of these. And there's one more, CM, Bank of Commerce. Oh, it's way down here. So as far as relative performance to other banks, it would appear, at least in the last 1 year, TD has been a better buy than BMO. Does that mean I'd rush out and sell Bank of Nova Scotia and buy TD? No. Let's just go to the chart of TD. And you see a similar picture. It's down 23% from the year to date, or off its 52-week high, rather. Its relative strength rating is a little bit better at 52, but still only in the middle of the pack. Earnings down 21% this year, and estimated to go up 9% next year. So a little bit better fundamentals, a little bit better relative strength. But is this a buy for me right now? No. If I owned it, I would put a chicken stop underneath here, underneath there for sure, or maybe half the position there and the other half here. If it goes below those, I mean, this could easily come back down into this area here. So it could easily come sub 50. So that's how I would approach this one. What was the other one? Oh, Suncor. This looks a little better. Relative strength rating is 91, so that's good. Anything over 90 is good. Institutions, 1,500 a year ago was like 13, so that's good. It's in the oil industry. It's the number 9th ranked industry, but the stock is only performing. Draw arrows in here. The composite rating is 13 out of 20. So I don't know, in their group, that doesn't have any other Canadian companies here, but there's it's only out of 20 stocks in this industry group, it's ranked 13th. So it's not really that high. So again, I don't know where this one was bought. I wouldn't still be owning it if I had it, and I wouldn't be a buyer of it unless it gets up over 34. And as far as stops, they would be under here. It gets under there, I'm gone. Again, who else is in that space? We can compare this one, Suncor, compare that to Canadian Natural Resources, CNQ. So it's outperforming CNQ, that's okay. Who's another one? CVs, Synovus. Oh, that's much better. So CVE is a much better stock. Let's take ExxonMobil. That's way down there too. So let's take a look at CVE as an alternative to Suncor. So here, this is a much better picture. Relative strength rating is 96. 25% increase in institutional interest. This pattern to me looks a whole lot better. In fact, if you draw a trend line here, this is a weekly chart, by the way, that I'm looking at. But a buy, this could be a buy above 20, even though this is 26% off its 52-week high. This, it could easily, if it gets through 20, it'll get back up to 23, and that's what, $3. That's about a 15% gain. If I owned it, my stop would have to go under here. That's a long ways away. Wow. That's like $14, which is $4 away, which is like what's that? That's another 20 or 30%. Yeah, way too much for me. I'd have to go to a daily chart. And you'd find a more, see, here's the 200-day moving average here. So if this one went below the 200-day moving average, I would be out of it. Oh, let's see how the daily chart looks on Suncor, because that was the question. It's now trading right at the 200-day moving average. So this is like a sell candidate right in around here. Certainly if it gets below 30, which is another 5% away. Okay, that's kind of a quick and dirty way of how I would look at these things. So if anybody else has any other stock ideas, by all means, fire them over and I could do a quick rundown just like this. Have a good evening.